Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
You're listening to Saving with Silverman. Mark Silverman, of course, the host of the show. I'm Ron Stutz. I get a chance to tag along for a while, and we appreciate your listening. 520-333-7601 is your number to call or text to get in touch with Mark's office at Silverman & Associates, 520-333-7601. You can arrange a time to come in and have a conversation in Tucson with Mark Silverman. Saving with Silverman is his website, savingwithsilverman.com. That's savingwithsilverman.com. And again, that all-important phone number, please remember this. Put it in your phone, whatever you have to do to recall it, 520-333-7601. Let's talk about knowing thyself. Mark, I know that you've been around long enough to know yourself pretty well. It's kind of a difficult thing for some of us to do, is to know ourselves.
Sometimes we're the hardest person to figure out is ourselves, right?
Exactly, yeah. Socrates, I'm going to get philosophical here for a moment. Socrates said that the unexamined life is not worth living. And when it comes to financial planning, it's important to examine yourself by pondering some of these important questions. What would be some answers that people might have to these questions if they really reflect on them seriously? And I know that you've, met a wide range of folks, and you have a lot of different kinds of people that you deal with every single day and every single year. The first question here is, how would a person deal with this? What financial issues do I really worry about? And what keeps me up at night? What has been your experience as far as that question is concerned?
I would have to say, I think people's number one concern is not running out of money, making sure you have enough to do everything that you want to do and that you have to do. And what I say have to do is, paying for healthcare, nursing home, those sorts of things towards the end of life. But I think what keeps people up at night is worrying and making sure that they have enough. And two, how much risk are they taking? So obviously, given what's going on with the market the last almost 2 months now, it seems like, all the volatility, the ups and downs, and it seems like it's been down quite a bit more so than we've seen in a while. That, can bother people as far as, looking at their accounts, whether they do it every day or every week or every month, and seeing, the volatility and seeing their accounts actually lose money. Just a really unpleasant feeling, worrying about your money all the time and being stressed out because you're scared you're going to outlive your money or, run out of money while you still have years left on your retirement. And, this show is all about achieving peace of mind. And I know that you help people get that every single day. Exactly.
Here's another question for you. What do I really desire the most, financially speaking? What are the people you deal with, Mark, on a regular basis? What is their biggest desire as far as their financial future is concerned? I think kind of it's like what you said, Ron. At the end of the day, peace of mind is where it's at, and knowing that they're going to have enough and do everything that they want to do, and knowing that they're going to, have enough money to live their life and maintain their lifestyle throughout their lifespan. So I think at the end of the day, that's what people want, is knowing with a high level of predictability that everything that they're doing, they're going to be financially independent and not have to worry about, leaning on either the government or family members, et cetera. Now, we don't get too philosophical on this show, but today we're doing that. Socrates said that the unexamined life is not worth living. It is important to know yourself. And there are some people out there who come into your office and they have certain biases that affect their financial decisions. What have you experienced there with people that you've met?
Well, we're all built based on our decisions. A lot of them are based on past experiences, and I think that's normal. So a lot of times people come in, maybe they've worked with an advisor in the past, maybe a stockbroker or something like that, or they were sold something that wasn't in their best interest, and they now realize that. And so they've been hesitant to work or trust somebody else, and that's certainly understandable. I think other biases, people who lost money in the last financial crisis, which was late 07 to early 09, and there's some people that still haven't gotten back into the market. We've even seen it recently, which is unfortunate. But by the same token, we do understand that. And then I think on the flip side of that, we've also seen people, given this run in the market since 2009. And like I said, we've had some volatility recently. But up until then, it's been pretty much a straight line up for most people. And they come to expect a certain rate of return each and every year. And that, unfortunately, it's not a reality. The markets are going to be volatile. If you're looking long-term, you should be okay. But looking at the day-to-day or year-by-year numbers, you're not guaranteed to make a certain percentage each year when you're in the stock market, unfortunately. And so people need to understand that and really focus on their plan and their goals.
The topic of our conversation now is know thyself. It is important to know yourself, and sometimes, as Mark said earlier in the show, it's more difficult to know yourself than it is to know other people around you. Mark Silverman is your certified financial planner professional, the founder and the managing member of Silverman and Associates. I'll give you the phone number again so you can get in touch with Mark in just a few moments here. Next question on the list here is, what did I learn about money from my parents, either by explicit teaching or just by observing, just kind of soaking it up through osmosis? What kind of influence have parents had on your clients and those who might be clients?
Sure. And I think both of those things come into play. Whether, your parents taught you about money or they didn't, you certainly learn from their habits. And for some people, those habits are good habits, living within your means, using credit cards, but using them in the responsible way so you get your points and your miles, but paying those off every month. That's the right way to use them. But people that don't use, credit cards the right way, where they're charging them up, living on more than what they're earning, having a lot of debt, not just mortgage debt, but having all sorts of other debt and just buying and not saving enough. Those are all bad things when you need to retire, or you have to retire, or want to retire and live off the assets that you've accumulated. If you haven't done a good job of saving, unfortunately, most people don't have pensions these days, so you're stuck living off your assets. And if you haven't really done a good job, like I said, saving, it's going to be a challenge. And a lot of people, it's a wake-up call when they meet with us and we go through this process where they realize that maybe what they're doing isn't enough and there's some other things that they need to take care of. Others we found, maybe their parents taught them well, they've observed, especially the people whose parents lived through the Depression, taught them to, make sure that you're always putting something away and living within your means. And if you're not living within your means when you're working, it's certainly going to be a problem in retirement.
Once again, you're listening to Saving with Silverman with the one and only Mark Silverman of Silverman and Associates. And one more question to throw at you here, Mark. What does money really mean to me? That's a good question that everybody needs to ask. And what role does it play in my life? Very important question that you really need to know the answer to.
Yeah, and money can't buy happiness, and I firmly believe that. But money is a tool and it's a resource, and stress plays a big role in our society. But I can tell you, you still have stress even if you do have money. I can tell you, I have a lot of clients that have a lot of money and still have issues and stress and those sorts of things. But not having money adds a whole nother level of stress. So if you could live within your means and do those sorts of things and make sure that you're always putting something away, the earlier you start, the better. I think that's the key to having a good retirement, whether you want to continue working in retirement or not, being able to retire when you want to, if you want to, those sorts of things. So having enough money to do the things that you want to do in retirement, I think, is important. But again, you have to start saving early or saving a lot if you start late. But again, money is just a tool, but you need to know how much you need in order to pay for the things that you want to do in retirement, and then also cover for the things that you may not want to do, which is, healthcare, paying for long-term care if you need it, those sorts of things. But again, we're happy to try to help and figure out what your number is, because everybody's situation is different. Everybody's vision of what retirement looks like is different. Some people don't even want to retire, and that's okay too. But being able to say you want to stop working because you have to, not because you want to, what we call work optional lifestyle, is an important part of everybody's financial plan.
It's certainly important to know yourself when you're talking about retiring and putting together a plan. Mark Silverman can help you do that because he knows all the right questions to ask, questions you might not think to ask yourself. And Mark, when folks make the phone call or send the text to the number I'm going to give out in just a moment here, what happens when they arrange a time to come in and visit with you?
Sure. So whether you're a first-time listener to the show, you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your chance to come in and have a conversation with me in my office to go through this process we call the financial physical. I can assure you I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we will discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. This becomes the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We do try our best to help everyone. However, our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. That's a very important number. You can call or text 520-333-7601. That is a number to hook you up with Mark Silverman at Silverman & Associates in Tucson. And go ahead and call. Don't procrastinate. 520-333-7601. 520-333-7601. You can call or text if you prefer to do that and get the financial physical. No obligation, no cost. Go ahead and get in touch. You're listening to Saving with Silverman. I'm Ron Stutz, along with Mark Silverman.
Picture this. Your financial statements have come in the mail. What's going through your head as you open them up? Maybe all that financial jargon is flustering. Maybe the numbers are confusing, or maybe those red arrows are leaving you in a funk. Don't base your future on a monthly letter. Keep listening to Saving with Silverman. Learn what true financial planning really looks like.
You're listening to the Saving with Silverman. Mark Silverman, the star of this show. He, of course, the founder and the managing member of Silverman & Associates. Ron Stutz here, hanging out for a little while with Mark today. Number to call to get in touch with Mark Silverman is 520-333-7601. 520-333-7601. Call or text. This show is all about preparing for your retirement, having the kind of retirement and the kind of peace of mind during those retirement years that you've always wanted. You've worked hard for your money, and so now's the time to sit back, relax, and do all the things that you've always wanted to do. 520-333-7601. And let's talk about long-term care, which is something that most people don't even like to think about, much less talk about, Mark. On the list of dozens of retirement-related concerns, how high on the list does the potential need for long-term care rank for most people?
Well, it's like you said, Ron, this isn't a conversation that's a fun one to have, but it's a real conversation, and it's one that needs to be had. And so with that being said, I think a lot of people don't think about long-term care or don't want to think about long-term care. The only times I see it come up as a concern is when somebody maybe had a friend or family member, maybe a parent that needed long-term care, and either they had it or didn't have it, and they see the need for it. But for most people, if they haven't gone through that, then it's not really a big concern, it doesn't seem like.
How realistic is it for someone to self-insure against long-term care expenses?
It depends, and it's always an option. So when we build, financial plans for our clients, in doing so, long-term care is one of the things that we discuss. And so we'll show them an estimation as far as what it might cost based on their age, when they might enter. I can tell you here in Tucson last year, 2017, the cost for a semi-private room was about $80,000 a year. In today's dollars.
Ouch.
The cost for a private room is about $100,000. So if the stay is probably on average about 3 years, you're looking somewhere between $250,000 to $300,000 in today's dollars. Mm-hmm. The problem is medical inflation. So medical inflation is running about 4.5% to 6%, depending on whose number you want to use. Whereas traditional inflation, we use a number of 3%. So if somebody's going to be going in, let's say they're 70 and maybe they're going to go in 10 years, that's significant. You're probably looking at that doubling that cost. So can it be done? Sure, depends on how much assets you have saved. But what you're trying to do, in my opinion, is if somebody's married, you're trying to protect each of the spouses. So if one spouse goes in, you're not draining all of your assets, so that other person can still live their life and be able to maintain somewhat of a lifestyle. So It's a conversation we have with everybody that comes in. It's a conversation that you need to have and figure out what the strategy is going to be going forward.
Is long-term care insurance a good investment for most people out there? And what are the pros and cons of long-term care insurance?
Well, traditional long-term care insurance, one of the big problems with it is a lot of the carriers that used to do it are now no longer doing it. So one, there's less competition. The other thing is it's use it or lose it. So you have to qualify for it. And even if you do so, even if you get in early and you get in at a good price, that doesn't mean that whatever you're paying, the premium amount's not going to go up. And so people that have had policies for numbers of years, they've noticed that there's going to be an increase in those costs. And a lot of people, hopefully they can afford to keep those going. But if they can't, then those benefits start to decrease and finally go to zero. And so that's one of the big problems. It's use it or lose it. And so I am not particularly, even though I'm licensed to sell long-term care insurance, a full disclosure, I've actually never sold a traditional long-term care policy, nor would I purchase one for myself or for my clients. But for those of you that do have them, I wouldn't say walk away from them. I think they're good to have depending on when you purchased them. I just think at this day and age, there's better ways of doing it.
Well, the sad thing is the fact that even if you got in and got a policy early, while it was priced reasonably, then by the time you get to the age where you're actually going to start needing it, or perhaps start needing it, then you may be priced right out of the market and not be able to afford it anymore.
True. And the other thing is if you don't need it, all that money you spent on that policy is gone.
Yeah.
So that's the other big problem.
Okay, there have to be some other solutions to this problem. We're talking about long-term care here on Saving with Silverman. What are some other ways to help protect yourself against long-term care expenses?
There's a couple ways. I mean, one of the ways out there, there's some annuities that offer some type of long-term care coverage, and those can be okay. But I think the best way at this point in time is using life insurance, a permanent policy, universal life insurance that offers living care benefits. And what those are is you're able to use the death benefit for long-term care purposes. You still have to qualify. It's still life insurance. But the benefit is you have this money. It's a way to leverage your dollars to cover long-term care expenses. The nice thing about it is if you don't need long-term care, you still have your cash value and you still have a tax-free death benefit that can be passed on to your beneficiary. So what it does is it gives you choices. We do a lot of this here in the office. It's a great way to either, if you have an old policy maybe that's not working for you or it's no longer serving the purpose that you purchased it for, a lot of times we're able to replace those and offer these benefits for sometimes not even the same cost, but less cost because of the fact that with life insurance, it's gotten cheaper because people are living longer. So that's one of the huge benefits there. But we've been able to replace some policies recently for people to give them these long-term care benefits or even start brand new policies for people that offer these benefits because it's just it's a better way of leveraging your dollars to cover this need if you decide you don't want to self-insure, which if you make no decision at all, you're basically deciding to self-insure.
You're listening to Mark Silverman, and even if you've listened to this show for a long time, you know what it's all about. And if you're listening for the first time today, thanks for being with us. And Mark, what happens if someone decides to reach out with a phone call?
Well, just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? So whether you're do-it-yourself or already working with someone, this is now your opportunity to come in and go through this process that we call the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you've always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? And I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or retired, this is a great opportunity to see what it looks like to work with someone who is actually required to have a fiduciary responsibility to look out for your best interest at all times. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We do try our best to help everyone. However, our slots fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. That is 520-333-7601. You can call that number or text. One more time, that's 520-333-7601. You're listening to Saving with Silverman with Mark Silverman of Silverman and Associates, with an office in Tucson serving all of southern Arizona. And we appreciate your being with us today.
Do you ever feel like you need Superman to help you with your financial crisis?
I've got you.
You've got me. Who's got you?
Well, we're not superheroes, but we can save the day when it comes to your finances. Keep listening to Saving with Silverman.
You're listening to Saving with Silverman. I'm Rod Stutz, along with Mark Silverman, certified financial planner professional at Silverman and Associates. And Mark, it's time to go to the request line here. We have a question from Thomas in Sierra Vista. Thomas says, I'm being forced into an early retirement at 57 from my job with the state. I'll have my pension, but that alone is not going to be enough to live on. Do I need to find another job since I'm too young for Social Security, or to withdraw from my IRAs?
Well, Thomas, that's a great question. It really depends on what other assets you've saved. If you have, other retirement accounts, IRAs, et cetera, there are ways to tap into those prior to 59 and a half. There's a certain election that you can do where you can take it for 5 years, where you might be able to take it out. You still pay taxes, but you can avoid the 10% penalty. And that's a strategy that might work in your case, depending on other assets you've saved. But you're probably looking at, it could be potentially a 40-year retirement, or at least 35. And so you probably want to make sure that you have enough assets to cover those sorts of things, and cost of living and all those sorts of things. You really need somebody to put a plan together for you, long story short, to make sure that you are going to be financially secure and able to not go back to work. So my best thing to tell you is to reach out to somebody. We're certainly happy to help. I'd try to find a CFP, a certified financial planner, that can put a plan together for you to make sure that your plan's going to be solid. And if you are short, how much you're short, and so you have an idea as far as how much more you need to save.
Thomas, thank you very much for the question. We have another question here from Bart in Vail. And Bart says, Mark, can you explain the rule of 100? Is it something that you believe in?
Well, it seems like we get this question every so often. Well, Bart, basically what the rule of 100 is, you take the number 100 minus your age. So let's say you're 60 years old. You take 100 minus 60, and that means 40% of your money is the maximum you should have in the stock market. Do I believe that? It could be a good guide, but I wouldn't necessarily go out and reallocate your portfolio based on that. The goal is so you get a lower percentage in stocks as you get older. So if you're 70, then you would only have 30% in stocks versus 40. Again, like I said, it's a guide that just kind of illustrates the purpose of maybe getting more conservative as you're getting close to retirement, but that's certainly not the way to do it for everybody out there. Yeah, there's more to it than just that. Everybody's got a different risk tolerance, goals, objectives, when they're retiring, how long their retirement's going to be, et cetera, et cetera. So that's how the rule works. Again, don't use that to change your portfolio, though.
The rule of 100, not be all, end all, but just kind of a general rule of thumb. We have a question here, our last question of today, from Martin in Green Valley. Martin says he's about to get married this summer, and it's going to be his second marriage for both of them. Are there any financial issues that he ought to be thinking about before entering into a second marriage like this?
Well, Martin, that's a great question, and congratulations. We are a community property state, so if this is a second marriage, you might have children from your first. Your spouse might have children from her first marriage. So depending on, how the assets would be divvied up, if you have retirement accounts, who the beneficiaries, other assets, who's going to be passed on to who. A lot of times your assets may go to your kids and your spouses may go to her kids, but that doesn't have to be that way. So those are the sorts of things you want to think about. You also want to look at other income streams. So if there's pensions, or if you're receiving a pension, or your spouse is receiving a pension, or not a pension, but maybe some type of payout, and we're kind of getting a little bit legal here, but as far as if you get remarried, maybe that goes away. So those are the sorts of things you want to make sure that you're not affecting those. Not here to advocate a prenuptial, but in some cases, those do make sense if you're just getting married without worrying about the financial aspects. But you may want to speak to an attorney to figure out the estate plan, how that might change when you start mixing families and that sort of thing. But great question.
Mark, I know that there are folks out there listening to the show today who would love to get in touch with you and come in and have a conversation with you. What do you have to offer those people?
Sure, Ron. So, we've had some great questions, and I just want to say that if any of you have questions that you want to hear on the air, go to our website, which is savingwithsilverman.com. And then if you click on the media tab and then radio, you could submit your question. Maybe you'll get to hear it here on the air. So now's my chance to ask you a question, and can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients, they become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'll repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and risk and diversification and insurance and estate planning and healthcare? Are you having those annual reviews, but hopefully it's more frequently than that? Is there detailed follow-up? Is there accountability? If you are, if all of that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be surprised at what you'll learn, and this won't cost you anything. Give us a call or send us a text to 520-333-7601, 520-333-7601. That's 520-333-7601, or check us out online at savingwithsilverman.com. That's savingwithsilverman.com. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Mark Silverman at Silverman and Associates in Tucson, 520-333-7601. That's 520-333-7601. Call or text 520-333-7601. You're listening to Saving with Silverman. Ron Stutz here, along with the one and only Mark Silverman.
You finished school and worked hard to get your first job. You told yourself you'd save for retirement, but that old jalopy you bought when you were 16 broke down, so you bought a new one. You started to save, and soon you bought your first home. Then came pets, kids, and your world changed some more. You worked hard to provide for your family. You made sure your kids got a good education. You might be sending them to school right now, or maybe it's the grandkids' turn. And of course, you're now making sure your parents are looked after. Through the years you lovingly sacrificed for your family, now it's time to take care of you. Love others well by taking care of yourself. Keep listening to Saving with Silverman to discover how to build a financial plan that'll continue providing for you and the ones you love for years to come.
Thank you so much for listening to Saving with Silverman today. The star of the show is Mark Silverman, certified financial planner professional at Silverman and Associates. The website is savingwithsilverman.com, but the all-important phone number is 520-333-7601. That's 520-333-7601. Call or text. You can get the planning process called the Financial Physical. Mark Silverman, of course, a certified financial planner professional, the founder and the managing member of Silverman and Associates. And that number to call again is 520-333-7601. Call that number, or you can send a text if you're more comfortable doing that. Either way, you don't have to talk to anybody today. You don't have any numbers in front of you. You don't have to have all your information gathered. Just go ahead and call that number, and then you can get ahead of those folks who may call at the end of the show. It's time now for the request line. We get great questions every week. And Mark, we have a good one today from Ben in Vail. Ben says he wants to retire when he's 55, and that is 6 years away. So he's 49, I guess. What should he be doing for the next decade to put himself in a position to do that?
Well, Ben, that's a great question. You need to seek out the help of a professional. And what I mean by professional is somebody that's willing to give you advice, not a salesperson. So if you're working with a stockbroker or an insurance salesperson, any of those type of people, you need to speak, in my opinion, go to the CFP website I'm a CFP, but you can go to the CFP website, look for any certified financial planner, and have them put a plan together for you. And make sure they do it objectively, where they're not trying to just sell you something, but they're going to put a plan together for you that's going to analyze your whole situation and tell you if you're on track or not. And if not, what you need to do to get on track and that sort of thing. So it's a great question. Sometimes we recommend getting together even sooner, but I think you're right in a position where if you're only 6 years away, you need to make sure that you're doing everything proper so that doesn't become 10 years or anything like that. But great question. If you want to speak to us, we're happy to go through that process with you and show you how we would do it. But if not, again, seek out a certified financial planner that's willing to put a plan together for you to make sure you're doing everything you can that's going to work out for you.
So many factors to consider in this, and thank you so much for sending in the question, Ben. And good idea. Come in and have a conversation with Mark. Charles in Sarita is next with a question, and Charles says, employees at my company have the opportunity to buy shares of stock in the company at a significant discount. Is this something that I should take advantage of?
Well, Charles, are you a fan of the company you work for? Assuming that you are, which most people are, because they might not work for the company if they don't feel that they're financially stable. But, typically when you do what's on an employee stock purchase plan, you typically do get a discount. Sometimes it could be, 10%. Sometimes we've even seen where they even get a significant discount. Sometimes those shares are restricted, which means you can't just buy them and sell them. You have to hold them for a certain time period. But it's a great way to invest if you have some extra money and you feel strongly about the company you work for. Hopefully you should. Then it could be a great deal. But that should be in addition to putting money away for your retirement. So if you have a 401k, et cetera, you should be putting money there too. But this is a great way to get some savings in you if you are getting a discount. So it's a great place to put some additional money away. Great way to save.
Okay, great question so far from Ben and Charles. And one more question today, Mark. You got time for one more?
Yep.
Margaret in Green Valley says, my husband wants to pay off either our house or our rental property just so that we'll have something paid off. We have enough in our money market account to pay off one of them, but I prefer seeing a lot of money in that account just in case we need it for something. Who's right? You want to jump into the middle of this?
Well, Margaret, I don't know the rates that you're paying, but typically the rates on a rental are higher interest rates than they would be on your primary mortgage. So with that being said, let's say you're paying 5% on the rental and 3% on your primary residence, then you'd probably want to pay off the 5%, which is the rental property, because you're paying higher interest on that. And then, of course, you are going to probably get a mortgage deduction with your primary residence too. So we can make the argument of whether it makes sense to keep that mortgage or not. I don't know if you have the money to do both. It didn't sound like you did. But, typically you want to pay off the rental first. And if you're keeping that property, then it's more cash flow that you're going to be getting for retirement. But certainly something we can investigate with more details if that's something that you're interested in. Certainly reach out to us and we can talk to you and give you some more advice based on more information.
Well, good questions today from Margaret and Charles and Ben. And if you have a question that you would like Mark to ask on a future show, you can go to the website, savingwithsilverman.com, find out how to submit that. And Mark will take the time to answer it on the show here. But you can get much more specific information about your situation by coming in and getting to know Mark and having him get to know you, because, he can give you all kinds of good generic advice here on the radio, but can't really get specific with your situation, and we're all different. So, it's a matter of coming in, having a conversation. He finds out more about you, you find out more about him, and there's no obligation either way. 520-333-7601 is your number to call or text. I'll give you that number again in just a moment in case you didn't write it down. And Mark, what do you have to offer those folks who reach out with a phone call?
Well, Ron, we've had some really great questions this week. And anybody that's listening, if you want to submit your question, just go to our website, which is savingwithsilverman.com. You click on the media tab and then put your question in there, and maybe you'll get to hear it on the air. But now's my chance to ask you a question, and can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I get it. I'm as much friends with so many of my clients, they become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'm going to repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and risk and diversification and insurance and estate planning and healthcare? Are you having those annual reviews? But hopefully it's more frequently than that. Is there detailed follow-up? Is there accountability? If you are, if all of that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be surprised at what you'll learn, and this won't cost you anything. Give us a call or send us a text to 520-333-7601, 520-333-7601. That's 520-333-7601. Or check us out online at savingwithsilverman.com. That's savingwithsilverman.com. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
520-333-7601. Send a text in that direction, or you can call 520-333-7601. The number to call to get in touch with Mark Silverman at Silverman & Associates, 520-333-7601. I hope you've written that down or put it in your phone, whatever you need to make sure you can remember it, 520-333-7601. Ron Stutz here along with Mark Silverman. And Mark, I got to say, you dispensed a lot of information out there today, and certainly enjoyed hanging out with you for a while.
Ron, it's been another great show. I want to thank everybody for taking the time to listen, and please let us know if we can help, and be safe out there.
Join us again next week for the next edition of Saving with Silverman.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.